Okay, a widespread down bar through previous support, which we've been talking about already. A down bar and a widespread and closing on the low, pushing down and through a previous support level with the next bar down. Now that's important. Okay, why is that important for it? That next bar down, widespread down, next bar closes lower.
Right, if the first bar is down and there's quite high volume on that bar, there could also be some buying. The next bar down shows that there's still far too much supply in there for there to be any strength.
Perfect.
So that's what confirms it.
You should have had some sort of up move behind you. And this price action, okay, is used to lock you into a poor long trade. You will see no demand after this to confirm the weakness. Now, how many of you here saw the YouTube video I did on oil in 2008? How many of you saw that? Or 2009, I think it was. Just want to see how many viewed the YouTube video. Let's just have a quick look. See how many of you actually watched the YouTube videos. That's a lot of people. Okay, good. All right, excellent. Okay. And if you haven't seen the videos, you can go to YouTube, just type in trade guide, or you'll find them. But what I talked about was oil. And this was when the oil market had to go to $200 a barrel. We all know that. I'm not going to dwell on that. But the real indication on July the 18th of 08, when the news was all bullish, was that bar there, that widespread down, took out all the support to the left, did something. Now, Tom, that high volume down bar like that is there for a reason. Okay, and it appears to lock in all those suckers that got in long at the top on the news. They now think to themselves, what just happened? Why did professional money do that?
Well, it's a very good way of locking in their profits. If they can have a widespread down after, suddenly after, you know, they've distributed or whatever, all those people that are locked in there thinking the prices might go higher, they're locked out of the trade because they suddenly think, oh my God, I should have sold out. I'm waiting now for the next rally. Of course, in a bear market, rallies never appear, not enough to get them out of trouble. There's those people that were going to short, then say, oh, I'm too late now, it's gone down too far. And it goes on and on and on. There's lots of other ways that widespread down has a great influence on the psychology of the herd and other traders.
Let's look at some other examples of that. That's a great one. It's a weekly chart of the crude oil futures contract. Now we can look at the Forex contract just on an hourly chart. Now this was the British pound. This was recent. I traded this. This was really a clue that we were going to see a decline, which we have seen now over the last week and a half, 2 weeks in the British pound. And it's all around, ironically, our Chancellor telling us some good news.
Well, it was. That's where we saw that upthrust.
That's exactly where we saw that upthrust.
Oh, good news.
Yeah, exactly that. Now, this was Tom and I have been watching the pound very closely and the dollar because I've been trading the currency futures contracts as well as the spot. Now, here we see the principle in action. Now, look at the bar that I've arrowed there, and you'll notice that the spread is enormous. In fact, it's the biggest spread or range on the chart. But what makes that very, very powerful sign of weakness is that it takes out this support that I've drawn at 544.6, which had held support for quite some time. It came off on very, very high volume, and the next bar closed down. Now that, for me, was the key. But look what happens as we try to go back up through it. Look, we go back up, and then it begins to drift back up, and it's no demand all the way along here. You've got serious signs of weakness, and then you get a little bit of weakness here and the whole thing takes off. So all we see here is that widespread down. Anyone who was long this contract because they'd read too much news about the dollar pound, there's plenty about there, was stuck. And throughout this down move that we've seen, and it's continued to come down, we had no demands in here. There's plenty of no demand bars. Look at this here as the market climbs. Look at the volume. Okay, look at the volume. And then we get another widespread down, and it keeps going because they've already locked everybody in, and anybody that was short, was long at this position at A, is now in serious trouble. Now, how many of you saw 6 months ago I did a seminar in the VSA Club about sugar, and I gave a trade setup? How many of you saw that? Where I said, look, sugar should come off, and we should be looking for a short eventually, and I gave specific rules to trade that, and we never, I'll go back and show you the rule that I gave, and I'll just remind you, I said very clearly, we saw a buying climax, okay, at around $24 on the sugar chart. The news, as you can see, was very, very, this was in August of last year, but I did give a very, very clear indication that there was weakness, okay, coming into the market. And in fact, on the daily chart, it was the beginning of distribution, but I couldn't take a short trade because the trend hadn't changed. However, I'm delighted to show you this chart now, because now we do have something going on. What we can see here is the uptrend, okay, which had been going on. There's some weakness here, but they came along, it churned the market for a while, tested, and then went back up to this $30 area. And all through here, we were hearing about the sugar shortage, and I thought to myself, at some point, they've got to lock people in who are long here, because a lot of people got long around $26, $27. What happens? Bar A, widespread down, okay, very, very big volume, as you can see, higher than the previous 7 weeks. The next bar closes just higher, again the volume's high, but it collapses to come on the low, so the closing price here closes on the low of the bar. The next bar closes down, and then we have a collapse last week. Now, this will be something that we can look at next week, where we would short this trade. Sorry, let me just go back. Where we would short this now is we must take out the $20 area, which on the daily chart was where we saw this climactic bar here. The reason it didn't come down immediately is they did do testing. All the way along here there were tests, and they held it up because they thought, well, we can get the price higher and really give them the news that there was a serious sugar shortage, and then we can take advantage. And sure enough, what I'm looking for now, just to be clear, is to breach 20, come down and go up and hit 20 on no demand. That will be an entry. Now that's going to take about another 2 months, but it is a trade. And I think most of you are VSA Club members here. If you are, I'm going to be tracking this throughout the club, and I'll be posting up as soon as I enter, I'll post it and show you where we're going to enter. Okay, is there any questions on these widespread downs closing on the low? Any questions on that? Type them in. I'm going to summarise that, and then we're going to get on. We're doing okay for time now. We're going to finish this, then we're going to take a 15-minute break, and then we're going to go into signs of strength. So, shorting after you see a widespread down bar through previous support. After you see the sign of weakness, it is confirmed as major weakness if the next bar after it is also a down bar, as we've just seen. Or if it is an up bar, it should look our chart example number 17, which was a no demand bar. Make at least 2 lower highs to confirm the start of a downtrend. Okay, that's important. 2 lower highs. We're talking about the high of the bar. Okay, lower highs mean obviously as the market's falling, it's making lower highs on the bar. We're not referring to the close there. We're referring to the highs. Enter a short trade on a no demand up bar or an up thrust. Again, these are where short trades appear.